When I heard that Unity was going public at between $34 to $42 per share, I was super excited. Despite this range, Unity actually opened at $75, and because of this, I decided to reassess the stock before pulling the trigger. After a 4-month steady climb, the stock has pulled back from a record $170, and I finally decided to open a small position in Unity, and here's why. Hey everybody, my name's Connor and welcome to my channel Trade in Places. My aim is to help you take advantage of the stock market so your money can work for you so that you don't have to. In this video, I'm going to cover the key reasons why I've decided to buy shares in Unity, starting with their market leadership position. Did you know that over 50% of all PC, mobile and console games are now being built on Unity's software engine? Their platform is making the gaming development process easier and more affordable for developers. However, they do have competition from rival Unreal Engine, which means that Unity won't have everything their own way. However, unless Unreal Engine happens to be Google or Facebook in disguise, a bit of competition is healthy and should only help grow the entire market. Lastly, as far as I'm aware, the vast majority, if not all of the colleges in the UK, use Unity over Unreal Engine in their computer courses, which is perhaps more important than it sounds as a new generation of video game developers learn their trade using Unity. Secondly then, I think that Unity has great long-term growth prospects. Unity grew their revenue 44% last year and is guiding for 40% this year, and that's very good growth for a company turning over $700 million. I believe that Unity will have given themselves a low bar to jump over, and therefore I expect sales growth to remain steady this year. Here's a quick chart to show you how this growth compares with 20 of the fastest growing stocks in the market. Analysts expect to see a deceleration in Unity's revenues post-pandemic. However, I think Unity has plenty of ways to further monetize their systems once a new generation of developers are reliant on their tools. In fact, over 70% of users use the free version of Unity software, and I'm sure we'll see the company shift those users into paid subscribers in the near future. Lastly then, I really like how Unity is increasingly diversifying its business. It's not just amateur game developers that love Unity software. Some of the largest game development companies in the world, such as EA, Take Two, Nintendo and Ubisoft, are customers of Unity, proving that the company caters to both extremes of the market and everything in between. In fact, the company has almost 800 customers, each paying over $100,000 in annual revenue. The company grew this high-paying customer base by 35% last year and inked exciting partnerships with numerous companies like Snap and Autodesk, proving that Unity is serious about growing its non-gaming revenues. Lastly, it's also worth mentioning that Unity's business is geographically diversified too, with revenue coming in from all over the globe. However, before you like and comment on this video, I want to point out that Unity stock is expensive, and at 40 times sales, a lot of the future growth is already priced in. Yet, after some quick technical analysis, I have identified what I believe are 3 good entry points in the stock, the first of which was $138, where I recently bought my first shares in the company. I will hold off increasing my position size unless Unity pulls back further to around $120 or $110 per share. There you go, 3 reasons why I've decided to add Unity to my portfolio and why you should keep an eye on this stock. Before you go, please click the like button. It only takes a second, so unless you have to rush off because your fire alarm's ringing, then please show some love, like and subscribe. Join the channel and I'll keep bringing you videos on some of the best growth stocks out there. Stay tuned because I've got loads of cool videos in the pipeline. Obviously subscribe, you'll get a notification when they come out, and that way you'll be able to act fast and hopefully make or save yourself some money on the stock market. In the meantime, check out my website tradingplaces.com and remember that your money should be working for you and not the other way around.